Hey, how's everyone doing? Can you just give me a quick sound check? Just let me know how the sound's coming in. Uh, no music. We've been getting flagged from YouTube, even though we have the rights to the music. So we just decided not to throw in any music. See what happens then. So again, if you could just let me know how the audio's coming in. Thanks for the thumbs up. Appreciate it. I'll be with you guys shortly. Hello, everyone. Welcome again to another edition of Silver Bullion Television (SBTV). I'm your host, Patrick Vieira, and thank you all for being here once again on our live stream. Quick roll call: Fat Vegan, how you doing? Eric Newman, Samari, thank you. Mark Sakardelli, first time I've seen you here. Welcome aboard. If it is your first time here, go ahead and type in new so we can see if we can acknowledge you at some point. Again, thanks for being here. Really do appreciate it. And also, if it is, again, your first time here, or if you haven't already done so, please do subscribe. Hit the bell to be notified on new updates and give us a thumbs up. If you like what we do, as always, we truly do appreciate your support and we thank you for it. You can always find us on social media. Silverbullion.com.sg is our website. We do sell gold, silver. We do store gold and silver. And what we do is we absolutely do specialize in systemic wealth protection. And if you know what's going on and you can clearly see it, come and talk to us. We probably have solutions for you, or we can help guide you through some of the things that look like to be coming up around the corner, just over the horizon. Silver Bullion SG is our Facebook website. Silver Bullion PL is where you can find us on Twitter. Audio versions bit.ly, SBTV iTunes, SBTV Spotify. And again, please do join our Crisis Tracker group. It is on the Telegram app, so go ahead and download it. It's a free app. Just download it, and we will post pretty much daily news as it pertains to things like gold, silver, the finance, and economy sectors. Um, we kind of sift through the noise and just kind of give you the things that probably have an interest or a value to you. So again, do join that crisis tracker group. We really do appreciate that as well. So let me go ahead and take a look at who's out there again. Shafsan, good morning. Again, first time I've seen you here. Welcome aboard. Truth Teller, how you doing? Christopher Thompson. Thank you, Christopher. Appreciate it. Welcome aboard. Max Strong, how you doing? Frank Cerveni, new. Glad you could make it. Frank, let us know where you're from, if that's okay with you. Victor Claudio, again, how you doing? Okay, so with that, we'll see how things going. Need to apologize. I forgot that it was this weekend that we did the daylight savings thing where time went back an hour. So I know I posted earlier at 9 p.m. Eastern, and then I realized this morning, hey, wait a minute, it should be 8 p.m. Eastern. So apologize for that. From here on out, we should be doing it at 9 p.m. Eastern and 10 8 10 a.m. or yeah 10 a.m. Singapore. So we should be getting the times cleared up then, or at least I should be able to. So again, John Michael Karma, welcome aboard. Buckwheat, how you doing? Sepa J, how you doing? Okay, Macedonian Sun, Melbourne. Okay, haven't seen you here as well. So yes, welcome aboard. Bay Creek History Detectives, welcome aboard. Appreciate you guys all being here. Um, Next week we're going to have Rick Rule. He'll be coming up as for our interview. A well-known guy, president and CEO of Sprott USA Holdings. He's also the founder of Sprott Global Resource Investments. And having survived four mining downturns and having thrived in four mining upturns, Rick Rule is one of the best and most influential people in the resource mining business. He truly is a wealth of knowledge, and I hope you folks can make it for next week's interview. Um, yeah, speaking of interviews, just a bit curious because I mean, I'll just say we've seen a big drop off in numbers, even subscriptions. We've seen a huge drop off. We're not sure, if it's exactly maybe something we need to change up, or if there's something going on with YouTube algos again. We have noticed, there was a purge a while back, and it was around that time, or even slightly before that time, we did notice our numbers going down. So we're just curious if any of you folks have noticed these types of things as well. We're doing the best we can. If we need to change up some things, we'll change up some things. But you just whatever they do is completely out of our control. So it's good to get some feedback from you guys to understand what's going on. Christopher Thompson, can you get DiMartino Booth on your show? We've had her twice. I'm sure we can ask to have her on again. Very very knowledgeable. She does see things in both directions, which is one thing I think a lot of people do appreciate about her. But again, very very knowledgeable when it comes to economics and the Fed. So we could try. We'll see if we can try and get her back on. Let's see what else is out there. Um, okay, okay. So we got through most of you guys here. I guess it's a little bit of a light turnout due to the time mix up on my behalf. My fault there. Okay, so having said that, I want to go ahead and we're gonna go forward with our ebook. Thank you. And what we're going to be giving away this week is Currency Wars, the Making of the Next Global Crisis. This is by James Rickards again. It's The book has a few years on it, but it absolutely explains things very, very well. So we elected to go ahead and bring this forward to all of you, or to the winner anyway, as the winner for the ebook prize. So in 71, President Nixon imposed national price controls and took the U.S. off the gold standard, which was an extreme measure intended to end an ongoing currency war that had destroyed faith in the U.S. dollar. And today we are engaged in a new currency war, and this time the consequences will be far worse than those that confronted Nixon. And it's not just a currency war, we're also in a trade war, and it seems like, just an internal bit of a war where a lot of people just aren't happy with what's going on. So we're going to be giving away James Rickards' ebook, Currency Wars. Okay. So, as always, the rules to the game. Excuse me. Download the Kindle app from your phone or tablet's app store. It is free, so go ahead and download it. And be the first to answer correctly in this live stream before the timer runs out. U.S. winners will be given a link to download the ebook. Winners outside the U.S. will be offered an alternative prize at our discretion. We'll have to work that one out. And you are going to have to provide us an email during this live stream if you are a winner. Uh, what we'll do, as always, your we will mute you in the comment section, so you can go ahead and send us your email, and no one else will see it. So that way we keep things nice and tidy. So if you guys are ready, let me go through a few more comments here. We'll go ahead and start the question. The question is going to refer back to last week's interview with Franklin Knowles. Okay, so with that, John Michael Carmen Nixon said it was temporary. Yes, he did. So with that, here's the question. According to Franklin Noll, what percentage of the money supply is actual physical notes? Now, he did give a number, which included notes and coin, and then he went and gave another number as to what it is in just notes. And that's the answer we're looking for. what percentage of the money supply is actual physical notes? So we'll have about a minute more, and just go ahead and put in your answer here. Let's see. So I know there's a little bit of a delay here. So go ahead and put in your answer. What you think the percentage is. Okay, so we're seeing Fat Vegan 30, Rusty Shackelford 15, Silver City Stacker 11, Seymour Rivers 10, uh, Harold B 50, Sean Walker 5. There is a correct answer in there. There is one, but we'll keep going. Okay. Mark 22%, Fat Vegan 13, Max Strong 10, K Hugo 18%, Christopher 30, Rusty 17. Okay. There are a couple winners in here. So what we're going to do is okay, time's going to run out. So what we're going to do is we'll play the answer for the winner. And the winner is the one who said 10%, which is Seymour Rivers. You got the answer correct first. So we're going to go ahead and we'll give you that ebook prize for James Rickards Currency Wars. And we're going to give Max Strong a runner-up prize of Build Your Own Bank, which seems to be a good book that a lot of people do like, by Aon Schmidt. And so here's the answer. Just to confirm, it is 10%. Okay. What percentage of the money supply are actually Federal Reserve notes compared to digital inputs, keystrokes?
Yeah. Or basically accounts, basically.
Yeah.
Yeah, I had to look this up because I don't keep this in the back of my head all the time. It looks like the money supply overall, when you're talking about savings accounts, checking accounts, all that, is about 18 trillion for the U.S. and 2 trillion of that is currency, and that would be coin and notes. So it's about 11% is, and probably 10% of overall is probably banknotes.
Okay, so there you go. 11% is probably cash and coin, and 10% is banknote. So there we go. Franklin Noll, I found it to be one of the more interesting interviews that we had this year. He gave a lot of good insight. I wish, and I gotta say, I wish the numbers were a bit higher for people who viewed his interview, because he really said a lot of things that I think, most of us, or at least for myself anyway, never thought of, never considered, never knew, never understood. So I appreciate Franklin Noll coming on last week. And so with that, let me go ahead and we'll take a look at the gold and silver price, and then we'll swing back around and we'll reflect a little bit on what Franklin Noll had to say. So again, Seymour Rivers, Currency Wars, Max Strong will send you the Build Your Own Bank. So congratulations to you both. Okay, so moving on to our website, silverbullion.com.sg. Let's take a look at how gold and silver are doing this morning. Yes, we now take Swiss franc for payments, so don't be afraid to use your different currencies if you would like to, if you want to, or if you need to. And nickel parcels, nickel's been doing okay. It's been getting a bit of a bump. It's been more in the news lately, especially because of how it is one of the key elements or key metals for electric vehicle batteries. So currency, US dollar, silver, down a bit, 23.67. It was actually down more, but it's starting to tick back up. Gold, 18.79. It was also down a bit more, starting to tick back up. Again, nickel is in that 15,000 range. It's also been steadily in that 15,000 range, has come up a bit since March. And again, our investor kit, it is free. Just click on this and you'll be able to see the PDF, or even download it if you want. A lot of good info here. Sign up for the storage account. I think this is key. I mean, you never know. You never know when you want to go ahead and do it, and it's good to have it in place now. I mean, you never know when you may want to go ahead and consider storing overseas as an option. It does. It's going to be some very interesting times in the very near future. So having a account ready to go may be a good thing. It's just another option. It's all about options right now at this point. Silver to gold ratio 79.4. We looks like it's going back up a bit. It was at one time 125 or so, went all the way down high 60s, and now it's back up to 79 or just under 80, high 70s, under 80. So that ratio, for you guys that know, basically it means how much ounces of silver do you need to equal 1 ounce of gold price wise. Right now it's 79.4. And a lot of you know historically that number should be between 16 and 20. So this is where we have people playing the ratio where they expect this number to go back down and they will be able to flip their silver for gold. It's a bit of a cheaper way to acquire some gold playing the ratio, or even acquire silver if that's what you're looking at. So again, silver a bit down, gold a bit down, not too much. They were down a bit more, so they look to be ticking back up. Moving on, let's go to Twitter, see what's going on with in the Twitterverse. This first one, John Solomon, I just came across it this morning here in Singapore. It's morning, and I thought it was pretty important because this kind of says or speaks of the uncertainty ahead. And I think this is something that maybe a lot of people did not understand, and I think globally, wherever you are in the world, this may be pretty interesting for you as well because things are getting absolutely complicated, where a barrage of election lawsuits threaten to delay final results for weeks or more. And people have said this: the uncertainty can bring instability if we simply do not know who the winner is or how much it's in question. So again, it's not a political thing where it's left or right. It's more of the way things are operating right now. So many states are looking to the U.S. Supreme Court to decide whether mailed-in ballots can be accepted after election day. So this is strange right here. If it can be accepted after election day, what does this mean? Does this mean there's a potential winner, but not so fast, my friends? We are going to dig back into it and have a small little revolt kind of a thing. I mean, it's a bit odd here. So with memories of Bush Gore in 2000, that whole hanging Chad incident, I'm sure a lot of you remember it. Over this Tuesday's presidential election, a record number of mail in ballots has resulted in a large number of court cases across the country in many battleground states. They range from local cases all the way up to the Supreme Court and cover a wide range of issues. The rulings could determine the outcome of the election, as most of the focus is on whether or not the ballots will be accepted after election day and by how many days. So election rules differ from state to state, which is why some extensions are allowed while other states have clear rules on an election day deadline. And this is kind of odd too because it I mean, one would think it should be in sync, right? I mean, you can have some states that are going to hold out, especially if they're a swing state, battleground state. So it's a bit odd the way it's set up. So, if this type of after election day finding of ballots, or excuse me, it's this type of after election day finding of ballots that invites the most significant fraud, because then you know the number of ballots you need to win. You just don't invite this after the count, go find your ballot to win type of approach in elections. So let me scroll down a bit. I just want to get to one part here. This SCOTUS blog, the Supreme Court of the U.S. blog. Let me just show you what to give you an idea. Let me make this a bit bigger because, like I said, I just found this morning, and it was I thought it's pretty amazing. So you look at all of these issues. Minnesota, whether a measure by Minnesota election officials extending the deadline for timely postmarked absentee ballots to be received and still counted until 1 week after election day violates the U.S. Constitution, and whether the challengers, two nominees to serve as Republican Party presidential electors in Minnesota, have legal standing to challenge the measure. Pennsylvania. Whether a decision by the Pennsylvania Supreme Court requiring the state to count mail in ballots received up to 3 days after the election, as long as they are not clearly postmarked after election day, violates federal election law and constitution. Whether Texas limitation of one absentee ballot drop off site per county violates the Constitution and the Voting Rights Act. Michigan, whether a policy by the Secretary of State of Michigan extending the deadline to receive absentee ballots that are postmarked by election day until 14 days after the election. 14 days after the election violates federal law and constitution. It goes on and on as you can see here, and this is one of the problems or one of the issues that is going to come about. I mean, it's not just who wins the election and all of these things. It's putting the country in limbo. It's putting the in some cases the world, the markets, the dollar, the economy, all in limbo. It's I just find it amazing that you have all of these actions or possible litigation that can come up after the election is over. I mean, it's all over the place. North Carolina, Ohio, Maine, um, so many states, Wisconsin, of course, so Florida, and just find it pretty amazing, pretty amazing. So let's move on a bit. All we can do is hope for the best, right? Catherine Austin Fitz, here we go. Bank of International Settlements is working with the Central Bank of Switzerland to develop digital currency proof of concept. So again, CBDCs, it's really starting to heat up. So Central Bank of Central Bank of Banks, the BIS, to trial digital currencies by year's end. That's how close we're getting. We're already at year's end, and this is October 27th of 2020. So the BIS is working on or with the Central Bank of Switzerland to develop a digital currency proof of concept. So they're studying the digital currency. The BIS is. It's working with the Central Bank of Switzerland to develop a proof of concept by the end of this year. 2 months away. I mean, the full of November and December. This is how close things are getting. The majority of the world's central banks are now at least researching digital currency in some form or another. I'm not sure how much they're going to research it. I think they already know. An executive at the BIS consortium that comprises most of the world's top central banks said that the BIS is working on a central bank digital currency pilot with Switzerland's central bank. By the end of this year, they hope to have the first wholesale CBDC proof of concept. Um, Wholesale CBDCs are central bank digital currencies held by banks. So theoretically, they'd facilitate cheaper transactions and greater security. Um, so banks are going to hold digital currencies that seems more like they would just have an account to distribute or maybe even in some ways being in charge of the ledger. This is find it strange here. Central CBDCs are going to be held by banks. That's a bit odd there. Um, okay, so central bank digital currencies differ from cryptocurrencies in so much that they're not decentralized. Again, this is coming from a crypto website here, decrypt.co. So they're probably more advanced than the central bank is. So they differ from cryptocurrencies in so much that they're not decentralized, and sometimes they don't rely on blockchain, but they're similar in so much that they loosely take inspiration from Bitcoin and distributed ledger technology. Remember this word. This is going to be a word that is going to pop up more and more and more. About 80% of the world's top central banks are at least considering them, according to a January report by the BIS. So I guess that report was last year. This report came out just this year. So looking ahead, we plan to build on central bank experience with the cross-border use of CBDC including with the Hong Kong Monetary Authority and the Bank of Thailand, the Monetary Authority of Singapore, and with the Swiss National Bank. So I'll let you know how it goes, since apparently we're going to be one of the ones that are going to be uh, taking this thing on. So I'll let you know how it how it goes. We'll see how it all is. Moving on. Not much of a story, but just a point to make. Shaq has voted for the first time at age 48, but he's not going to say who. But the point is, you got to get out and have your voice. Either way, whatever you feel, you need to get out and have a voice. Dr. Sandeep Parwaga, this guy's pretty interesting on Twitter. If you can, go ahead and follow him. So he's saying they have been hit by soaring costs of food and energy. Wait until the real food inflation kicks in. Then the lines will look like the 1930s bread lines. And this is a report coming out of the UK, where growing numbers of newly hungry forced to use UK food banks. See if we can just. All right, go ahead. Manage my cookies. Oh, geez. Okay. Anyway, food and charities. Okay, can't really do anything with this. But what it's saying is it's more of the middle class now in the UK that is growing, especially in Britain. They are growing to where they need access to food banks. They need food support. Whereas before, this article was saying it was mostly the poor and destitute, but now they are seeing families, middle class families coming in that need relief. So it's even in the UK. We know it's in the US. We've seen articles about it time and time again. So now it's getting more prominent, I suppose, in the UK as well. William Middlecoop, uh, but this is just a bit strange. It's just more and more how we're hearing this word, the Great Reset.
ISIS. And
we need a great reset.
Now is the time to think what history would say about this crisis. And now is the time for all of us to define our own role. What is it that would make it so that history would look at this crisis as the great opportunity for reset?
The Great Reset is a welcome recognition that this human tragedy must be a wake-up call. It is imperative that we reimagine, rebuild, redesign, reinvigorate, and rebalance our world. Rebalancing investment, harnessing science and technology, and advancing the transition to net zero emissions, all elements of the Great Reset, are fundamental to building the future we need.
Okay, so we need the Great Reset. One Royal Wolf, I see your message. Good luck. Good luck to you, my friend. Wish you all the best with it. Got to improve. Always got to improve ourselves, right? So good job. Proud of you, my man. Happy for you. Thanks for sharing that. Let's see. On this day, 1965, the new clad quarters are released for circulation throughout the U.S. Clad refers to coins that have a core and outer layer made of different metals. Since 1965, all circulating U.S. dimes, quarters, half dollars, and dollars have been clad. And for those of us in the know, before 65 was the year 64. And 64 and prior, coins were basically made up of 90% silver. So the first striking of half dollars from new coinage materials at the U.S. Mint in Denver on Thursday. Press release 1965. 1965. Production of the new half dollar authorized by the Coinage Act of 1965 will start on December 30th of that year. The new half dollar will continue to bear the Kennedy design approved by Congress 2 years ago. Coin designs are retained for 25 years unless Congress directs an earlier change. The new half dollar will contain 40% silver compared to the traditional 90% silver half dollars. However, in appearance, the new coin will be nearly identical to the old half dollar as it will have outer layers of 80% silver. The core will be 21% silver, lowering the total silver content to about 40%. And that's where a lot of the problems began. 65, we took out the silver. 71, we closed the gold window. And it's it's been an ongoing issue ever ever since. So anyway, let me take a look at some comments, and I'll just look at a couple more things on Twitter here. Uh, Anna Max, the only reset we need is well, you're going to have your chance, or at least people in the U.S. are going to have their chance. I mean, it seems this year more than any other in quite a while seems to really be a big deal. So we'll see how these things go. 49 fine, love my junk. Absolutely. 90% silver, I think they're also good to have as well. I mean, the things that we talk about, cash, junk silver, silver, gold, Bitcoin, and CGT, cash gold token. Those are things that you'll always find me talking about as financial tools that you should have in case things get a little bit dicey in the future. So good point. Junk silver, absolutely. Let's see. Nothing like silver jingling in your pocket. That is true. That is true. Um, okay, what else is out there? Okay, so we're good with that. All right, so let's get back to a couple more things on Twitter, and then we'll move forward. Okay, so there's our article on coins. Lynn Alden, you know what? This one I'm going to put the link in the comment section because it's kind of a long article, but it's excellent. I think it's a good read for people. It really does say a lot. It's just that it's a bit long, so I'll put it in the comment section, and you guys can go ahead and copy that and take a look at it. It's a good article, good piece by Lynn Alden. Maybe one day we'll try and get her on as well. Okay, let me go back here. Why is gold not acting like gold? Safe haven quality to kick in after U.S. election. We'll take a quick look at that, and then we'll get going with the rest of the program. Silver Independent, I think, is just forwarding news from Kitco. Yes, it is. So let me go forward to Kitco. Okay, so this came out just October 29th, pretty recent. Why is gold not acting like gold? Safe haven quality to kick in after U.S. elections. Gold hit a 1 month low this week amid election uncertainty and renewed bug fears. But the $1 million question is, when will the metals start acting like metals? Said RJO Futures senior commodities broker Bob Habercom. Precious metal tumbled to a new low of 1859 on Thursday and was unable to recover significantly higher at the time of the writing. We have the bug uptick. Stocks are down, the dollar is up. The markets were anticipating a stimulus deal, but there's no stimulus coming between now and the election. It's if the sell-off gets worse right before the election, gold will first test 1850 announced, and then 1825 is his prediction. We could see 1825 if you get more announcements of shutdowns because of the bug. Equities could get spooked even more, which will probably in turn pull gold and silver lower ahead of the election, he said. Just 2 weeks ago, markets were almost sure of a Democratic sweep at the polls. Now the situation seems to be more muddled. So again, we're not trying to be political here. We're just showing how gold, silver, the dollar, the economy are reacting to what we're hearing, and in some cases what we're not hearing. But if you asked me 2 weeks ago who was going to win, I would have told you Biden. If you asked me today, I'm starting to think Trump is going to pull it out. So you could see a, a Trump win, which would see a significant rally in the equities that night, and then a significant rise in gold and silver, along with the equities, coupled with the hope that a stimulus deal is coming through. If Biden wins, since I mentioned Trump, I'll mention Biden. The metals, including gold, will rally even more because the stimulus package is likely to be significantly higher than Trump's. So after we get past this election, you should see a rally in precious metals because the likelihood of a stimulus deal coming through will be much more. So again, this is what we mainly want to talk about is again how right now gold, silver, the economy, and the dollar are all being affected by what this election is or the outcome or even the uncertainty is going to bring forward. So again, we're not being political here. We're just looking at what people have as their opinions as to what's going to go on with the dollar economy and gold and silver. Vote red or blue, gold is the winner because this is what it does seem to be. Again, the BIS talking about CBDCs and digital currencies. But mainly it's this here. Ronald Storfley, he kind of says it all. If either person wins, however Congress is taking whatever it is, more federal fiscal stimulus monetized by the Fed and U.S. banking system. And this is why a lot of people do feel that it may go down a bit, but it definitely is going to go up because this fiscal stimulus that's in the bag. It's going to have to happen. So that's no matter what happens short term, this is going to happen, and this is where people are pretty much all in agreement that gold and silver are going to rise. But we'll take a look at a lot of it anyway, and see what the guys say. Um, let's see, take a look at a few more comments here. Um, full name, okay. Okay. Yes, 49 fine. I tell you, Lynn, she's awesome. The work she puts in, her knowledge also is just incredible. We'll see if we can get her on. She's I tell you, she's out there. She's in a league of her own, for sure. So great comment. Um, what else is there? Um, Step J, gold silver seems like a long term move. It can. I think most of us to get into it, we do know that it is a long term thing, but also yes, we do like to see the metals move, have some life in them. But I think with what's going on, a lot of the uncertainty, uh, I think most people are seeing that no matter where you go with your vote, gold and silver, they look to be as something or two metals that are going to be or precious metals look to be on the move. Too much uncertainty out there. That's for sure. Too much uncertainty. So let's let's move on. I want to go back and revisit last week's guest, Franklin Noll, being that he has consulted for the Treasury and the Federal Reserve. He does carry a lot of weight in knowing currencies and policies. So he's even helping to push or to bring more knowledge to smart banknotes. And it's something. It's an in between these CBDCs and where we are today with cash. It's kind of a go between. But let's go back and take a look at a few things that Franklin had to say. He's in the know. What do you say to people who feel that CBDCs and all of these things and the eventual phasing out of cash at some point? Well, what do you say to them when they say things like this is going to limit freedoms and things like that?
I think that's a very valid concern. There are some ideas floating around about CBDCs that take this into account and say we won't track the money, or there won't be a necessity to track the money below a certain transaction level, much like there is today in the US. If you move $10,000 or more, that has to be recorded somewhere. And I couldn't see why a central bank couldn't set up a system saying you're transacting less than $100 or $500. Nobody has to know where that's going. They don't have to track that. And maybe you might tie it to a denomination. I'm not quite sure how that would work in practicality. But central banks are thinking about this. And there has to be a way to do it without impinging on privacy. But it's a really valid concern.
Okay, so there is, yes, a valid concern when it comes to CBDCs. Today we need compliance officers to see that regulations are followed. in the amount of cash a person uses, deposits, withdrawals, even transfers. It is being watched, and make no mistake on that. But with CBDCs, it simply might be an automatic thing where AI will simply monitor the transactions and flag suspicious transactions. Maybe it may be too much, over a certain amount, maybe where it's going, things like that. So it's going to be monitored, and this is what I believe. I'm not putting words in Franklin's mouth, where he was saying it may be better if they just would come out with the standards that they look to use or impose or regulations. But the thing is, what are they going to deem to be suspicious? That's the question. No one knows right now. Today we know it's if it's something like $10,000, or $20,000 cash payments or deposits or things like that. What it's going to be with CBDCs, not sure. Nobody knows, and this is something that it's going to have to be cleared up, because it's going to leave a lot of questions in people's mind. Um, Moving on, something else Franklin said.
The U.S. government didn't print its own notes until 1861. And those were demand notes, which had a small issue. This is at the start of the U.S. Civil War. And the government's trying to figure out ways to finance the war. The big change that occurs is in 1862, when the Legal Tender Act is passed. And that's when the first fiat currency is printed in the United States. And these are United States notes, which come to be known as greenbacks.
Okay, so printing money out of thin air, I believe back then, was done to finance wars. And this is something we spoke about. I mean, interestingly enough, the more I look at it, gold is peace in some ways. If you had that gold back in the money, it was peace. And this is something we spoke about last week, where Kennedy might not have liked the dollar being linked to gold, because you cannot fund a war with the currency linked to gold. This was Kennedy's concern. And back then, remember Cuban Missile Crisis, things like that. Um, US dollar being the world's reserve currency, if it's linked to gold, you're limited. And that was a thought process back then. And without being linked to gold, you can print as much as you want. You can go ahead and fund wars, create wars, and all of these things, and you don't have to eh, be concerned in a sense that how are you going to pay it back, because it's not linked to gold. So in a sense, more and more it looks like a gold-backed currency is a peaceful currency. So I mean, I'm hoping in some way, shape, or form it does go back to being linked to gold. So there were a few subtle messages in that, a few subtle messages in what Kennedy had to say as well. But the thing that stands out for me is it seemed like, if you have it backed by gold, then I think you have a more peaceful place. So let's all hope for the best. Another one. I got to ask you this, otherwise the guys they're gonna skewer me if I don't. The currencies, the bills, the notes, they represent a country's history, things like that. So how did a pyramid get on the U.S. $1 bill?
Well, it's on the Great Seal, and so you'd have to talk to somebody at the State Department about why it's on the Great Seal to begin with. And I don't know why the designers at the time thought putting the Great Seal on the back of the one was a great idea. If there's any hidden meaning in there, it was with who came up with the Great Seal, and I forget who that is. If it was Ben Franklin or somebody else on that committee coming up with the Great Seal during the Revolutionary War. Sorry, I can't come up with a better answer than that.
No, it's I'm at peace. I'm at peace knowing nobody's trying to put little secret hidden things in the notes. Yeah, I had to ask him that question, because I know a few of you guys probably would have insisted that I ask him that question. Okay, so no secret messages in the notes. Okay, so we'll go with that, I guess. But it is just odd though that yeah, I had to ask him that pyramid thing, because I know a lot of you guys out there probably would have wanted that that question asked. So let me take a look at a few more of your comments here, as it pertains to gold. Let's see. Hidden numismatist, how are you doing? How are you doing, my friend? So let me see a few more things here. Okay, Rolf Steiner. You run out of gold, the war stops, or you shake down your serfs until they are bankrupt and storming the castle. Or back then it was critically important. I mean, you even had Spanish conquistadors coming to Central South America looking for gold, and gold funded so much of what happened throughout history. And it just was something that countries, nations, kings, people, held in reverence. It was the money. It was solid, sound, real money. And again, something that probably prevented more wars from going on. If you didn't have the gold, you couldn't fund the war. It was pretty much a straightforward, simple answer, to a complex question or complex policies during those times. But it's just my opinion. Maybe too much of my opinion there, but gold is peace. It surely does seem like it now. Okay, so moving on. Um, let's talk about election day. It's coming up. It's just about here, and I want to take a look at not necessarily who people are voting for. Um, that's not the point here, but what it means for gold, the economy, and the dollar. And so what I did this past week, I went ahead and emailed a few of our past guests, and they were kind enough to respond and give me their opinions, which I will share with you on what it means for gold, the economy, and the dollar this upcoming election. And again, it's not about necessarily who people want to vote for or anything like that. It's just what they see as far as going down the road, what they see. I mean, the stimulus, I think that's in the bag. Everybody agrees to that. It's going to have to be reworked, but when and how will it be reworked? That's another question that's up in the air. So we'll be a few articles from the web, and then along with some past guests, and so let's just be a bit open here, and again, it is about what they see coming up in the future from their points of view. Okay, so gold price. What I did was turn these web pages into PDF articles and just highlight key points. This is from the title: What happens to the gold price if Biden is elected? This is from investingnews.com, October 6th, about a month ago. So Americans have a lot to consider ahead of the presidential election. Some of the most pressing issues facing the head of state will be the country's 23.3 trillion in debt, the rising bug cases, and growing chasm dividing the country socially. Reviving the economy will also be an immediate challenge, no matter who the winner. So, if Biden wins, history suggests a potential upside. The last Democrat in charge of the White House was Obama, and if Biden wins, uh, the country he will lead will be markedly different from the one he saw as when he was vice president. The overall market is one reason why. And before the bug outbreak, the Dow Jones looked to be on a steady upward trajectory. And since February of 2009, and in February of this year, the index of the 30 large US listed companies reached an all time high of over 29,000. The rally was, of course, short lived. Markets plummeted globally just over a month later, and the Dow hit its lowest point since November 2016 at 18,588. At the same time, the price of gold has been incrementally increasing since November 2016. It's risen from 1183 per ounce to about 1900 a month before this year's election. Going back when Obama took office in 2009, the price of gold was valued at just over 890. And by the end of his first term, the metal had climbed to around 80 or climbed around 88.6% to over 1,685. So while his first 4 years benefited the metal greatly, His second term proved more volatile, and gold slipped from 1685 in 2013 to 1195 in 2017, 28.9% decrease. Over the entirety of his presidency, gold's value increased by 34%. It should be noted that the metal's previous all time high of over 1900 occurred during his tenure. Notably, his era also saw a significant increase to the value of the US dollar. The largest gain for the greenback came from mid 2014 to early 2015 when it grew 79% to 100.8, excuse me. So as mentioned, gold moved positively during Trump's first term in January 2017. The currency metal was priced at 1210 and there was a fresh all-time high of more than 2000 set during his presidency. By the end of September, gold had added roughly 54% of its value under under Republican leadership. So looking at his potential impact on gold and the dollar, Lobo Tigre. I know a lot of you folks know him, of independent speculator. So this was just the background on how gold has moved and reacted during different presidencies. Okay, no real political position there. But Lobo Tigre of independent speculator posited that a second Trump term could be just as good as the first in terms of the gold price. Okay, we're talking gold price now. Okay. However, he did note that a Democrat sweep on election night could also be a good thing. You know what? If it's a Biden administration, that might be even better for gold, he said. I'm just saying, as an analyst, looking at the gold price, I suspect a Biden administration, especially with Democrats in both houses of Congress approving long delayed infrastructure plans and other things, I think that would be really good for not just gold, but all commodities. Brent Cook of Exploration Insights sees a Democrat win having little impact on gold's value. I think it would stay about the same. I mean, bottom line, the amount of money that's being pumped into the system in the trillions of dollars and the push towards inflation, those things aren't going to change regardless of who's in charge. That's a good point. I think probably more impactful for gold price or for the gold price is going to be when or if a bug vaccine becomes widely available, which starts kicking the U.S. economy back into gear. So let me move down a bit more. Mercenary geologist Mickey Fulp, who we've had on quite a while ago, might be interesting to get him back on again. He says a Biden presidency would a deterrent for a Biden presidency would, maybe it should be B, would be a deterrent for gold, especially the transition period between governments, which he would expect to cause market volatility, or maybe would not be a deterrent. Not sure. I think they're missing a word here. If Biden gets elected, the markets are going to react negatively. Stock markets are going to react negatively because markets do not like change. At some point, that's probably going to normalize. Danielle DiMartino Booth, U.S. Federal Reserve critic and chief strategist at Cool Intelligence, expects the current political and social landscape to benefit gold. Gold and disruption go hand in hand, she said. So, to the extent that there was continued and increased social unrest after the election, that I think would benefit gold prices for sure. So, the economic commentator explained that a Trump presidency would be viewed as friendlier for riskier assets, including gold, while a Biden presidency could result in a crackdown on monopolies. There's a presupposition that Biden would clamp down a little bit more on the monopolization of the U.S. economy, which I'm sorry, but a blind person could see that, she said. It doesn't take much to understand that we have become a nation that is worse than what it was back in the robber baron era. So that would certainly come as a risk if Biden was to win. Regardless, DiMartino Booth doesn't think either candidate will tackle what she views as the Fed's oversteps in terms of price discovery. I don't know any leader right now being considered to run the country that would have the strength given the present fiscal backdrop. Given how deep the recession is and how prolonged it looks like it's going to be, who would even begin to try and rein in the Fed right now because they need the money printers, so to speak, especially if we see continued gridlock. Okay, so let me move down a bit. We will see a commodity super cycle with precious metals, energy commodities, and industrial metals. This was coming from Tigre, Global Tigre again. Either because the economy recovers and the raw materials of the economy are needed, or because it doesn't, and the stimulus really opens up the inflationary floodgates and includes infrastructure plans and other investing that would be good for commodities. So these are opinions of just a few people. I'll give you an opinion of someone else, Peter Schiff.
Peter Schiff, senior economist and chief market strategist of Euro Pacific Capital, joins me today to talk about election outcomes.
Just a heads up, this is all credit goes to the street, Kitco presenter David Lynn. All credit to them.
And the investment implications for either party's win. Peter, let's start with your outlook here. How do you feel about the elections going in? We're only 2 weeks away.
Well, I don't feel good about the election at all. I think the outcome is going to be a Biden win. And I also think it's more likely than not that the Democrats will take the Senate as well, giving them control of both houses of Congress and the White House. And, as reckless as the Republicans have been with borrowing and spending, I expect the Democrats to be even worse. And unfortunately, unlike when Obama was president and you had some pushback by the Tea Party in the Republicans to kind of rein in Obama and keep him from borrowing and spending as much as he would have liked, that opposition is not going to exist anymore. Basically, the Tea Party is dead. Trump helped kill it. And so there are no fiscal, responsible Republicans. So it's just going to be massive deficit spending, which means massive money printing to finance it, which is inflation. They call it quantitative easing, but it's going to feel a lot more like inflation, especially when it comes to consumer prices, which have been somewhat under control recently. But I think they're going to run out of control after Biden comes to the White House.
Okay, so Peter Schiff doesn't feel good about the election. He's looking at a Biden win. He's looking for Democrats to take over. Massive deficit spending, money printing. We all know that's going to continue already, no matter who gets in. Inflation to come on consumer prices. That one's just a matter of time as well. No fiscal control when Biden takes over. I think that one is a great point, because if it's a clean sweep by either side, then either side really they have no the checks and balances become a little bit more opaque, I guess. It becomes a little bit more not sure what the right word is, but I think a clean sweep is, you would really see things either to your liking or not to your liking. So I think in some ways it's good to possibly have a split just to make sure things are kind of held in check. But who knows? I'm not a political analyst, right? So moving on. Another thing that Peter Schiff had to say.
Back to your forecast here, what are you basing this Biden win on? Is it just the polls? Because remember last time, 2016, Trump wasn't leading the polls in the entire way.
Yeah, I thought the polls were underestimating Trump's support back then, and nobody expected Trump to win. And I kind of thought that an upset was possible, in fact, probable. But now Trump is even further behind than he was back then. And, I don't think it's the same dynamic. Trump was an unknown quantity back then. I think a lot of people were willing to take a chance on somebody who promised to drain the swamp and make America great again. Neither of those promises were kept by the president. I mean, he pretends that he kept them, but he hasn't. In fact, the signature issue that he ran on was the trade deficit. He was going to make America great again by reducing our trade deficits. We were losing on trade. That was the result of incompetent trade deals negotiated by his predecessors. Well, last week, we reported the single largest monthly trade deficit in goods in the history of the country. Our trade deficits with China have never been bigger. Our trade deficits with Mexico have never been bigger. So if we were losing on trade before Trump was elected, we're losing even bigger since he's been elected. So the budget deficits are out of control. The trade deficits are out of control. Government is bigger than ever, spending more than ever, borrowing more than ever. The Federal Reserve is printing more than ever. We are further away from greatness than we've ever been. So I just don't see a lot of the people who took a shot on an unknown quantity repeating that. I think more people now are going to vote Biden if they want change, even though clearly Biden doesn't represent change. He represents a continuation of the failed policies. But, Trump isn't change either because he's the incumbent. So I think when times are bad and voters are frustrated, the tendency is to throw the bums out, even if it means putting another bum in.
Yeah.
Okay, so people who took a chance last time won't this time. Trade deals were failed. Let's see, deficits have gotten bigger, spending, borrowing, printing more than ever. That part we know. Continuation of failed policies. The debt is such a burden. That I think it's difficult for anyone to have any policy get going. The last thing he said, throw the bums out, even if it means putting another bum in. And I guess in his view, that's what it's come to. That's what it's come to in Peter Schiff's view. So again, these are just opinions from different people, and more importantly, we're looking at how is this going to affect gold, silver, the dollar, and the economy. Let's take a look at an article from fnlondon.com. A gold rally could be short-lived, says a JP Morgan analyst. Okay, so this was October 14th, a couple weeks ago. A Democrat sweep could lead to a 2 to 5% spike in gold prices on the back of a knee-jerk move towards a weaker U.S. dollar and lower yields, according to JP Morgan metals analyst Natasha Kaneva. The market consensus is that a Biden win would hit markets as investors react negatively to a tougher tax and regulatory agenda that would lead to a spike in gold prices, is what she said. However, the analysts think a gold price surge on a Biden victory and a Democrat win in Congress could be temporary, as expected government stimulus spending would boost growth. This part here, I think it could also be seen the other way, where some people say it'll increase or boost growth. Other people see it as, it's a tell just how in trouble the economy is, and then again move or flock into things like precious metals. So I think, it just depends how you want to look at it. So when I read this, there's another side to that story. So we think the initial move higher could prove to be short-lived, as a sweep, if there is a sweep, could also clear the way for front-loaded fiscal stimulus, boosting the near-term growth outlook and likely driving higher yields on the margin. If Biden wins, but Republicans, in other words, there's a split still, the analysts forecast a 2% increase in gold prices. Analysts say a Trump win could knock 5% off gold prices on a stronger U.S. dollar. And they say a contested outcome could boost gold prices 2 to 5%. Again, for me, this one's here a bit questionable as well. I do see another side to the coin there, but it's her opinion. In the longer term, the analysts remain bearish on the gold price, expecting stimulus spending and U.S. Federal Reserve fiscal policy to lead to a downward trend in prices. Ultimately, while a blue wave outcome could add short-term upside to our medium-term bearish outlook for gold, we expect Fed policy and inflation expectations will matter more for long-term yields, meaning we would still be comfortable with our longer-term downward price trajectory, especially if market focus switch to stimulus. So in August, Mark Mobius said investors should wait for a price correction before buying gold. And we actually saw that. So Mark Mobius, you got it. A correction is typically defined as a 10% or more drop in the price. The safest investment are equities and precious metals such as gold. However, I would not advise buying gold or precious metals at this time until a price correction has taken place. It may have, it just may have taken place. So that's one article from let me just check what this was again. It was coming out of JP Morgan, but it was from fnlondon.com. So I want to give you an opinion on a past guest now, Florian Grumis from Midas Touch Consulting. He says he thinks Trump is going to win, but what he sees happening is stock markets will explode, and the antidote gold and silver could therefore correct a few more weeks, similar to 2016. But Trump being confirmed as the next president will likely make sure that a fiscal package will pass as soon as possible. That will put a solid bid under gold and commodity prices as well, but should still lead to my anticipated mid December low in gold, from which I expect a strong rally going into Q1 of 21. He goes on to say, if Biden wins, stock markets will likely move lower by pricing in higher taxes and more regulation. And most importantly, the fact that any fiscal stimulus package won't pass until early 2021. Gold and silver, on the other hand, will probably start marching higher immediately. So he's you can see he's really thought it out. Unfortunately, due to the political theater and hundreds of lawyers on both sides, uncertainty is also a very likely outcome next week. And we just went over at the top of the program how you're seeing all of these cases already building up. It's already building. But in that case, it could take weeks or even months until it is clear who will be the next U.S. president. Markets hate uncertainty, which could mean a sell off in all asset classes. Goes on to say Bitcoin at the same time has decoupled from stocks and other major asset classes, but has become rather overbought. We saw Bitcoin touch 14,000, right? Just recently over the weekend. Bitcoin looks extremely bullish here and could even take out 14,000 sooner than expected, but I would not buy at current levels. Should Bitcoin pull back a bit more significantly towards 12.5 and preferably towards or even below 12,000, it gets interesting again. To conclude, I really hope this election will pass peacefully and with a clear result. Florian Grumis, that was a well thought out answer. So yeah, I'd send him that email asking him what does he think about gold, the dollar, and the economy post election or whoever wins. And so Florian, thank you. Appreciate you sending that in. Let me take a look at some of the comments here. Silver Warrior, how many people here store PMs out of your home country? That's an interesting question because, if there are some people who believe, and rightfully so, that if you don't hold it, you don't own it. I understand that. I get it. And then there are other people who do believe that you want to have some gold that may be out of reach, out of your home jurisdiction for various reasons that I also agree with. And I think it just really depends on your own personal opinion on how you see things. Some guys think, it needs to be all with me. Some guys think I should have some with me, but then again, I should spread some out. And it's one thing, guys always say, diversify, 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 diversify. And that even means the location. Diversify your assets and diversify the location of your assets in some cases. So that's pretty interesting point there as well. Okay, so let me move on here. Okay, so one more article here. Let me move forward to it. This is from valuethemarkets.com. Will the U.S. election results cause the price of gold to soar or plunge? So this is what we're talking about today. How It affects the dollar, the economy, gold, and silver. A weakening dollar. The effect of the election on the price of gold is a topic of passionate debate. It's generally understood that the value of the US dollar correlates with the price of gold. A high dollar value means a lower price for gold, while a weaker dollar value means a higher price for gold. Some believe a President Trump win will increase the value of the dollar and a Biden win will decrease it. But no one knows for sure, and equally, the opposite could come true. So, what will happen to the price of gold if Biden wins the 2020 election? This is a question precious metals investors should be asking themselves, but there are many factors to consider before a conclusion can be reached. Three scenarios as seen by this article. When Trump won in 2016, the price of gold fell. Remember that night it was marching up, marching up, marching up, and then as soon as more or less about the time it was confirmed that he won, then it fell. We saw gold fall, but up until that point it was marching up, and when it was deemed that he was the winner, it fell. So it stands to reason that if he loses 2020, there will be a stock market crash propelling the price of gold. So the opposite is what they're saying. But things are never this simple. The stock market rally has already seen an unprecedented rally this year, mainly spurred on by mass government stimulus. So if more stimulus is forthcoming, then this rally may well continue. That stimulus, it either side, it's going to happen. First and foremost, there are three scenarios to consider. If Biden wins a full sweep and resulting where Democrats control House and Senate, another scenario, Biden wins the election but not the Senate. Another scenario, Biden loses and Trump wins. Okay, so first scenario, full Democrat control. Um, he's a big fan of the greener economy, so he's not a friend to the mining industry. His regulatory changes are expected to include a 1.7 trillion climate policy and a 1.3 trillion infrastructure environment plan or improvement plan. This would be a this would be great for improving the future of the country, but would drastically increase the national debt at a time when it's already perilously high. He is also expected to bring in corporate and capital gains tax hikes and industry regulations. This would put further strain on the value of the dollar, which would be bad for U.S. stocks, but positive for the price of gold. Okay, second scenario is a split uh, house and split, I guess, split houses. Okay, but the Republicans still control the Senate. Trump's tax regime will likely, excuse me, let me back up. Second scenario, Biden wins the election, but the Republicans still control the Senate. Okay. Here, Trump's tax regime will likely remain and Biden's hands will be tied. This may keep the markets steadier as the changes will be less impactful and uncertainty reduced. Biden's reign is expected to be calmer without the unpredictable and random acts of control Trump is famed for. Biden would be more likely to calm trade relations with China and lift various sanctions on foreign countries. This would be beneficial to the stock market, but more likely to reduce demand for gold. Other contributing factors, Fed is already committed to low interest rates, at least until 2023, in a bid to support economic growth and boost employment. This means the value of the US dollar is likely to weaken in the coming 2 years, no matter who's in charge. This is a key point. Value of the US dollar is likely to weaken in the coming 2 years, no matter who's in charge. This will boost the price of gold, but is bad for the economy. If Trump wins, the US dollar will weaken the least. It will weaken further in the case of Biden, win with a Republican Senate, and it will weaken the most with the Democrat sweep. But here's the main part. There's also another situation which would not be pleasant for the country, but would most probably send the price of gold soaring, and that's a contested election. So again, remember the top of the show already. These cases are lining up. If there is no clear winner or Trump refuses to accept a Biden victory, chaos will ensue. Pandemic remains, or pandemic means mail voting is likely to be at record highs. Again, referring to the top of the program, this is difficult to manage in ordinary circumstances, but as Trump is very suspicious of the accuracy of mail voting, it's likely to be a drawn out process. Um, He's also twice now said he thinks the election is likely to end up in the Supreme Court, and we know why. Again, referring to the top of the show, the scenario would drag out the process of confirming a new president at least into 2021. So again, a lot of uncertainty. Markets don't like uncertainty. Gold and silver. Uh, yeah, it really looks to be it's going to be either attracted or it's going to repel to some things that are going on. So again, you know, I just want to be clear. This is not, uh, you know, it's not anything political. It's just to say if this person wins, then let's look at these things happening. If that person wins, then let's look at those things happening. So again, it's just things that maybe we didn't look at or understand or never considered. So that it's the point I'm trying to make here. Okay, so nothing political here. Take a look at a few comments. Um, let's see. Okay, I think you guys are doing fine. Everything looks calm there. So calm is good. Calm is good. Okay, moving on. Dave Kranzler mailed him out the same question, and he's kind enough to answer. From Dave Kranzler from Investment Research Dynamics. For me, it doesn't matter who wins. Um, the person in the Oval Office is not in control of the monetary policies that form the fundamental basis for owning gold and silver. Goes on to say, regardless of which party sits in the Oval Office and Congress, the budget deficit and debt load will accelerate, and thereby money printing will accelerate. The dollar will continue, or the dollar will start to collapse. The countries that have a lot of gold and can prove it will benefit at the expense of countries that are hollowed out and do not have provable gold reserves, e.g., the U.S. Dave Kranzler goes on to say this country will be third world living conditions for all but the top echelon of wealth holders who own a lot of gold. So Dave doesn't mince his words. He said it straight. Um, doesn't matter who wins, and I think this is the part of the point we're trying to make here, where it in some ways it goes beyond that because we're going to see a lot of changes, in the dollar, the economy, gold and silver. So that's really what we're taking a look at, and how each person may affect what happens with those things. One more article I want to take a look at, and then I'll just stick with past guests since we're running a bit over here. So take a look at something Jeffrey Gundlach said. So October 27, 2020, fairly recent. The polls right now say he isn't going to win, but they said that 4 years ago, said Gundlach. Mind you, my conviction is way lower than it was 4 years ago, but back in that period when Trump was a little more than an asterisk in the betting odds, I predicted he was going to win. This one much more murky, but in my eyes, it favors Trump wins. So again, opinions all around. Public political polls are often designated to create impressions rather than illustrate reality. Should not be trusted. Um, so some people hedge their bets and split their vote towards retaining a Republican Senate because they view Biden as risky, said Gunluck, who noted that Trump is often portrayed as riskier than Biden. Okay, so different opinion. It's good to have different opinions. If Biden indeed wins the election and eventually rolls back or eliminates corporate tax reduction from 2017's Tax Cuts and Jobs Acts, U.S. equity valuations would increase sharply, said Gunlow. But the reduction in after-tax earnings would mean that stock prices would not appreciate. Interest rates, volatility, and inflation would also rise, said Gunlow. Markets don't like certainty, and with Trump, not sure if this is supposed to be certainty or uncertainty, but anyway, I think you have more. With Trump, I think you have more certainty, said Gunlow. With Biden, you have peak uncertainty because there's been very little information to give to the public. Let me just go down a bit to the very end. He goes on to say, I don't have a Republican vote. I actually don't like Republicans, and I don't like Democrats, said Gunlow. I used to be a Democrat and I voted for Republicans, but I simply don't like the influence peddling that both parties do. They've really turned into the same party in terms of their sources of money. Okay, Jeffrey, good luck. Let's take a look at what else other people said. Craig Hemke, TF Metals report. Doesn't matter who wins. More and more, this is what we're seeing. Guys are really giving this answer. It's not going to matter who wins. Precious metals will rally. Again, this is what a lot of guys are saying is going to happen. And the U.S. deficit this year will again exceed $3 trillion regardless, and the Fed will monetize nearly all of it. So the outlook is very, very, it's not questionable what they're going to do, but it's more questionable on what other countries are, their opinions are going to be on the U.S. and the strength of the dollar, on things like uh, holding and buying U.S. treasuries, things like that, foreign direct investment, uh, things like getting away from the U.S. dollars. There's a lot that is actually going on here. Chris from Mullen, technicaltraders.com. Sorry, I have no idea what happens if different party wins. I'm waiting to see, then follow. At first, I was like, Chris, an answer would have been good here. But then again, I thought about it. He's a trader. So as a true trader, he's able to detach emotions from speculating. So then I understood Chris's response, or at least in my mind, I understood why that may have been his response. So in actuality, it's a good answer. Jan Neuenhaus, if either Trump or Biden wins the election, look for gold and silver to get more attractive, as both of them cannot make the highest debt burden the U.S. has ever seen disappear. In addition, the U.S. is looking to become increasingly more politically unstable, which can damage monetary stability. Again, think if you're outside of the U.S. and you're looking at the U.S., a lot of questions start to come up. A lot of confidence starts to be questioned as well. So it's a very good point there. Hang on, I think there was a bit he had to say. Okay, so there we are. Sorry about that. Mark Valek, partner, Incrementum AG. If the Democrats achieve a clean sweep, the markets would likely have the most harsh reaction in so far that the dollar will plunge and gold and silver will rally. Equities could react somewhat positive too in this kind of environment. Okay, he goes on to say, if Republicans stay in power of the Senate and the presidency and House goes to Democrats, I expect a more difficult environment for equity markets, positive reaction from gold and silver, although not as positive with the clean sweep. Continues on, big question mark will be how the markets react to a phase of indecision or a contested result. Likely equity markets negative and USD negative, gold positive, silver not as positive. So might have to get back and ask him why that was his opinion there. Lynette Zhang, ITM Trading. It doesn't matter who gets elected, they are not who is driving the bus. And when the overvalued markets tank, central banks will rush in to prop it back up again. The danger is when that doesn't work. And we kind of talked about that where, you know, if Powell is just cranking that printing press away full steam, starts to smoke, bearings start to smoke, printer falls apart, and everything the Fed has done just simply doesn't work anymore. Where are we going to go from there? I mean, we kind of touched on that before. If it's going to break down, it's going to break down with the Fed going full steam ahead. I don't think it's going to break down with the Fed holding back. So it's kind of a interesting thought if you think about it. The Fed does all it can, and what if it still breaks down? You know, where do you really go from there? Take a look at another some more input by one more guest or two more guests, and then we'll be wrapping up. Chris Marcus, but let me go back to Gerald Salente from Trends Journal. If Biden wins, it'll be a positive boost for gold and silver since he'll pump more cheap money into the economy than Trump. So I guess it goes to say that both of them are going to pump in money, but maybe perhaps one more than the other. And last guy we'll take a look at, Chris Marcus, that man with that guitar there. Chris Marcus, Arcadia Economics. I'd say that if Either candidate wins the upcoming student council election and cons the rest of the world into letting him or her play emperor. Look for the dollar to be devalued and for gold and silver to continue on in a fractional reserve system. Here's the key part. Until enough people start watching Silver Bullion TV, SBTV, take physical delivery of metals, and expose the COMEX Ponzi scheme. Okay, Chris Marcus, I think that's the greatest advice any guest ever gave. Just kidding. So again, really what this was about is um, just the impact it's going to have on gold, silver, and the economy. Because in the end, here's the point: if you agree with some of the opinions, get out and vote, make it happen. If you disagree with some of the opinions, get out and vote, state your case, make your point. After it's over, get some gold, get some silver, get some peace. After it's over, just try to get some peace, mend those fences again. And in different situations for different people, it may be storing outside of your home country, your own jurisdiction, may be something that you might want to consider. So I'll play something Dave Drummond had said quite a while back, but it makes absolute sense.
I believe, like many people, gold and silver are stores of wealth. They could also be an investment instrument, but if you don't look at them like an investment instrument, if you look at them as stores of wealth, you'll note that they hold them very well. And then where have the stores of wealth typically been put? They've been put in areas where there's low risk or smaller risk of those countries being invaded and the gold being taken. So do I think it's wise? Yes, I think it's wise to have some gold and silver within hands reach, some gold and silver within cars reach, and then some gold and silver within no one's reach, right? With that, I believe that there are places then to store your gold and silver. Looking for places like you guys have that capability. Look for those companies that have that ability and use it. Same type of thing, right? Redundancy.
Okay, so Dave Drummond, he has the point there. I mean, everyone has a different situation, a different. Not sure what the right word is, but I've said this before. Some people, we stack silver. We get what we can when we can. We stack silver, and definitely we want to hold it with us. Other people, they take positions in silver. They are more fortunate to be able to buy sizable amount more, and keeping it all at home sometimes is not an option. And even in some cases, keeping it in your own country sometimes may not be the best option for you. And so this is what, not to put words in his mouth, but this is what I take Dave Drummond's words to be. So again, if you believe, keeping it with you is the right thing to do for you, absolutely, by all means, do that. If your situation is different, where you are concerned about what's coming up, you are concerned about is keeping it in my home country the best thing to do, give us a call, shoot us an email. Just shoot us an email. We can go ahead and help walk you through it. So it's, again, it just depends on your situation. I wouldn't say there's any right or wrong answer. It just truly depends on your situation. So I'll take a look at a few more comments. Um, again, this live stream is not meant to be political in any way, shape, or form. It's just to say people have different opinions as to what's going to happen if who gets in, or what's going to happen if things are contested. So that's really what we were looking to discuss here. Um, okay, let's see. The most excellent way you are loved. First time I've seen you. Welcome aboard. Dollar has fallen 98%. Why is neither candidate telling the people that the consequences of a 90-year deficit policy has led to a 98% fall in the value of the dollar in real terms, which is against AU or gold? That's a good point. Why aren't they talking about it? I don't think it's in their interest to really wake people up, that get people that woke to understand what's been going on. It's a good point, though. Absolutely a good point. I just not sure if they would really want to do that. You know, I'm just not sure. Looking more at a few other comments. Let's see what else is out here. Uh, okay. Okay, Rolf Steiner, it will be the greatest human experiment ever because it will be a worldwide event this time. Let me see what the context of that is. Um, okay, anyway. Okay. Remember, all this debt has sucked future prosperity into the present. It's a great point. But when the debts come unpayable, uh, I think, you know, it'll always be payable in a sense that it could always go ahead and print money, slip digits into accounts and things like that. So in some ways, it's always payable. But the thing is, you can't exactly do that because if that were to happen, uh, no one is. You could forget any country wanting to to hold U.S. debt at that point. Whereas really, what's the value in it? I suppose at that point, and I think you would definitely see countries just close the door to the U.S. dollar anymore and not want to hold it, have it, or use it. So they could pay for it, print print it all up, pay everyone that needs to be paid. But where's the value in it anymore? I mean, people would simply understand there's no value in the dollar if that's the way it's going to be treated and have no confidence in it because money is confidence. We understand that, right? You got to have confidence in your money. Otherwise, if there's no confidence, it cannot be money if people have no confidence in it. So, Ralph, great. It's a great point there. Um, okay, so with that, okay, hang on, wait a minute. Okay, one more. I'll read one more. John Michael Karma, the leaders, quotations. Never speak of a dollar, money, currency, fiat, Fed note in their proper context. I'd agree with that. How can people understand fiat if it continues to be called a dollar and not a Fed note? That's true. You know, I think it's just what we grow into, we understand to be true, and we just kind of go with it. We don't ever question it because there's, I suppose, the confidence in it. Um, it's not until that confidence starts to waver that maybe the questions will really come out as to, what are we doing? What is this thing called fiat? So, again, in all these things, though, this is why, again, things like gold and silver, stores of value, they hold the value of your time, your labor, what you've worked for. Um, I'm borrowing that from Mike Maloney since I think he explained it well. It is storing the value of your time and your labor. Fiat, there's going to come a day where it simply, we already know, what's coming ahead and how currencies look to be like they're going to be getting in trouble. And this is why we do see a lot of people moving into stores of value. Again, things like gold and silver to get them to not only store the value of whatever they've done, but to also get them or hold them in that transition or get them through the transition to when we move into something new, like perhaps the central bank digital currencies or whatever they plan to do. Um, it's a good idea knowing that we're going to get away from things on this side and we're going to move to things on that side. It's a good idea to understand how to get through that transition of getting from here to there. Some people call it they graphically represent it as a barbell, or which is kind of true in a sense. We're here, we're going to move to there. So how do we get to there? What's the vehicle in that transition? So again, this is where things like what attracts people to things like gold and silver. So having said that, um, just it's going to be an interesting week. Um, just what do I say? Be cool. Just be cool during the week. We'll and hopefully things will be peaceful as Florian Groom has said. And as we noted, as we pointed out, it seems that when currency was backed by gold, money was backed by gold, it seems that there was a bit more world peace back then. I mean, I know there were two world wars and things, but relative to today. Um, so let's hope that gold and silver do come back into play somehow, some way. But again, it's just my opinion. But as always, be a blessing, not a burden. We are going to see, opportunities ahead. So let's hope we can help people take advantage of these opportunities and move ourselves all into better places. So, it's good to know the downside of things so that we can better position ourselves to enjoy and experience the upside of things. That's what it's about. So as always, you guys take care. Saddle up for what's coming ahead and silver up as well. And when we meet next week, we'll see how things really are. You guys take care of each other, and we'll see you then. Bye-bye. Thanks.